So today we are talking digital assets and wealth building. I believe we've all been watching the space, all what has been happening with all the talks around DeFi and everything. So today we're going to be looking at how we can build wealth and how we can trade digital assets, but especially focusing on the DeFi. Before we can jump into the topic, it's best that we start off by introducing ourselves so that we can get to know each other, that the discussions go properly after knowing each other. I'm Alakanani, better known as the all the way from Botswana. And welcome to the panel. We can start off by introducing ourselves. We'll start with Nicholas. You can give us a 2 minutes introduction, who you are, where you're coming from. Nicholas, are you there?
Yeah. My name is Nicholas, and for BitHub Africa, I'm an engineer there. I support the servers and the equipment that we use, both on premise and in the cloud. Also do a lot of software support, and generally, mostly in the crypto space, more on the technical side. Though I do follow the markets, maybe a bit of trading, not much, and but yeah, most of my involvement in the crypto is more on the technical side of it. Yeah.
All right, thank you so much, Maureen.
Good. Hello, everyone. I'm not sure what time of day you'll be watching this, but hello. My name is Maureen Murat. I am principal at Crowdy Advisors, which is a business consulting firm. For the most part, we do a lot of work with small businesses and entrepreneurs who are looking to raise money via equity and debt crowdfunding. I'm also an attorney, so that kind of feeds some of my work. And I am also an adjunct professor at the University of New Hampshire School of Law, where I teach tokenomics and cryptocurrency regulations and smart cities, smart government. I'm looking forward to this conversation because I think a lot of it will actually help our communities rise, if you will. Thank you for having me.
Thank you so much, Maureen. Jamari?
Yes, good day or evening. My name is Jamari Peterson. I tell people, go remember, Jamari on Safari is Ferrari. Jamari, it helps just a little bit, not even a lot. So it's my background. I was a co-founder of the Quantum Resistant Ledger, which was meant to introduce quantum resistant cryptography into the blockchain space for the future issue of quantum computing breaking the current encryption, which will make the entire networks vulnerable. Currently, I've been working on Finite Games, which is democratizing the approach to esports and layering on an ad tech network using what's called non-fungible tokens. Also designed a proof of stake protocol to facilitate micro lending with the digital reserve that I've recently been working on some new tweaks to hopefully be able to launch it on the Ethernet 2 network when that comes out.
Thanks so much, Rosalie.
Great, thank you so much. Hi to everyone who's watching, and it's a delight, a great honor and a privilege to be able to share insights with you during this conference. The Director of Growth and User Acquisitions at Pesabase, which is a payments and remittance solution provider in Africa. And our vision is simply to connect Africa financially so that people don't have to, have so many headaches in terms of just moving money to friends and family across borders. I'm an economist, that's my background, and I've specialized in research in the blockchain space out of a passion to just understand the digital economy and the future of just payments, economy, and especially youth in a context of tech revolving so fast. And there's a need for us to catch up. There's a need for us to build synergy solutions and being able to create the systems that we as young people will be able to kind of leverage and build upon in the years to come, because at the rate at which things are changing, we can't be comfortable with status quo. So thank you so much. I look forward to having this conversation.
Thank you. Looking forward to having a very productive chat with you. Valerie?
Hello, I'm Valerie Dehia. Happy to be here with you all today. I'm a partner at the law firm Perkins Cooley in the investment management practice, and I represent clients who are looking to issue digital assets that are commodities and oftentimes securities, and helping them solve the regulatory issues around those offerings, and oftentimes figuring out, the utility purpose versus investment purpose and how to make those things fit seamlessly together. I represent clients in the looking at blockchain in a much broader context, and how it can provide solutions to address some of the issues in the broader financial services sector, whether that's from facilitating payments or reducing time with clearance and settlement type issues. I'm very much looking forward to hearing everyone's thoughts, and I'm happy to be here. And so thanks for having me.
Yep. Thank you so much, Valerie, for honoring the invitation. Thank you so much for all those beautiful introductions, and so beautiful that you're coming from and space in the crypto world. So we are here today, as we said, we are talking DeFi. Maybe the first thing that we would love to ask, and I will, direct this question first to you, Rosalie. What are DeFi? Someone understand out there who's not familiar with what are DeFi?
Yeah, so one of the best examples that I found quite recently being able to explain decentralized finance is the analogy of a barter trade. So think back to the time when people were able to trade, buy and sell their goods across different communities very easily. I mean, if you had your produce from your farm, you had your animals that you wanted to sell, all you had to do was come to a common space, a marketplace, whereby you could agree with someone else that you wanted to exchange these goods and services. And, that was it, actually. But imagine this kind of trade coming into a digital space, whereby you have so many different kinds of tokens, platforms, and exchanges. So for many people who are wondering why, like some tokens are, shooting prices and others are dipping prices so fast, just understand that there's a basic concept of trade. And with this trade, it's going into digital spaces very easily. And instead of physical goods and services like your produce or your animals and things like that, you're dealing with tokens. And that is one of the easiest concepts that I find for people to be able to relate with DeFi, because the more we get into technical aspects, it's just that we're building upon the ability of people being in a position to create value and to make payments, as well as create sustainability in terms of non-fungible tokens and other things like that. But at the heart of it, it's that people are being able to trade their tokens for value, in a nutshell. Yeah.
Thank you so much. I think you really simplified so beautifully. People are taking their tokens for value. Jumari, what can you add on to that?
Yes, I would say when I think about DeFi, or decentralized finance, the thing that I really think about it's the remaking of the financial infrastructure within a context where people are, as she said, are able to directly interact with each other, or at least set a protocol or a method for interacting with each other that they agree with. Over time, our financial systems have been built across the disenfranchisement, oppression, around colonialism, around intense capitalism, and has been structured and created this institutional inertia where it has made it difficult for people to be able to chart their own path and methodologies for building wealth. What decentralized finance, or DeFi, is providing is a platform for people to quickly accelerate and evolve what the financial infrastructure looks like that they want to participate in, and find out what fits their risk appetite, what fits their value system, what fits the way that they want to interact with others. Because it's an opt-in type of system, people are choosing systems and infrastructure that's underlying how any transaction is handled that's financial related inside of new and innovative ways. And every week right now, we're hearing about new people approaching it different ways. And you have this massive evolution and speed of what finance is looking like, especially in the DeFi space. So for me, it's the evolution of the infrastructure within a context where you, the individual, are in control of what the new institution of finance looks like.
And can I just add on to what Jamari just raised with regards to kind of the institutionalized systems that oftentimes foreclose opportunity for underrepresented minorities. And when you think about, you go into many urban areas here in the United States and there aren't banks, there are no traditional financial institutions that have a vested interest in those communities. And so oftentimes they are foreclosed from having that upwards mobility. And because of systematized racism, they're foreclosed from being able to actually have access to capital, whether it's to start a business or to buy a house or whatever it is that it may be. So I think that DeFi, kind of going along with what Jamari was saying and what Rosalind was saying, is it's a mechanism for access and for potentially democratizing access and providing access to people who have traditionally been shut out of being able to build wealth and have access to capital.
Not to say that we're there yet in the space, but that's the vision of where we can get.
Actually, I think the most amazing thing about decentralized finance, it gives power to the people, and moving away from the centralized structure whereby you have to incur cost, you have to bear time, and you have to follow through with so many procedures. It's that you're actually giving people that chance to transact without limits of time and cost.
Valerie,
Yes.
maybe as a follow-up to what you were discussing before, I call on Maureen. What are the legal issues around DeFi? Some of the legal issues you think that they're around?
I think some of the primary legal issues, aside from all of the regulatory issues, but I think confidence, right? Because what lends confidence to, people look for confidence, and that's what helps perpetuate mass adoption. If I go to Bank of America or a traditional financial institution to take out a loan, I know that there is a process. They know that they are going to be paid back because they've taken some type of collateral interest in something that I have. Whereas when it is completely decentralized, the question you have to figure out, how do you get the same level of security and confidence in the system so that the counterparties don't feel as though their counterparty is exposing them to potential risk and vice versa. I think that's one of the basic things that, still needs some work.
Okay.
And I would definitely.
Maureen,
Sorry, go ahead.
Sorry for that. Yes, I was saying, what are your thoughts on what Valerie has just said?
Well, I definitely agree with Valerie in terms of the access and those issues that revolve around being able to access it, because even during this COVID-19 pandemic, there are, I forget what the figure was. It was around 40% of people. I'm based in DC. I think it's about 40 or 42% of people don't have access to steady Wi-Fi, which sounds crazy, right? Because we've been living our lives for the past 6 months online. So access definitely, in my opinion, goes hand in hand. The digital divide, I should say, goes hand in hand with the wealth gap divide. But the other, and what Valerie mentioned in terms of regulatory issues, which is, my focus, I guess. One thing I would say is that, yes, decentralized finance is definitely a way to get these digital assets in the hands of people who wouldn't normally have access to them if they went through the traditional route. But at the end of the day, these are still financial instruments, right? And so financial instruments are essentially monetary contracts between people. And so just like Jamari was saying, people can go into these agreements with each other, and they can transact and agree on what the terms are. We still have to take into account that, all of this is going on to, that's built on, the software is built on a blockchain, and we have to be mindful of the data that we put on the blockchain. I won't say what I normally say about it, but, garbage in, garbage out, so we also have to be mindful of that. And I think that's where the regulatory landscape kind of gets a little cloudy, because in one way they do rely on, we are relying on decentralized finance, but then we're also still relying on humans, right? We still need people to be part of this process. And I think we have to be mindful of the people that are part of the process, to make this as fair and equitable as possible. Because even though we're talking about Black wealth and all that, also know that a lot of the whales in this, in the crypto whales are not diverse. So there's, when they want to take over, they take over. So we have to be mindful of that. I'll leave it at that.
Okay, awesome. Nicholas, can you throw your menu to?
I mean, I agree with everybody. The main thing about DeFi, at least in terms of, can you hear me?
Yes, we can hear you.
Okay. Right. So I agree with what everybody's saying. DeFi, it's a question of access. It gives people who normally wouldn't have access to those kind of instruments, they get into the playing field. They get a feel of what it is to participate in this space. So the big thing for me with DeFi right now is just that it gives people who normally wouldn't have access to this kind of financial instruments access. And of course, there are questions about the platforms that we're using in terms of scalability, their customer-facing kind of interfaces and all that. But I think that comes later. That comes after people realize that this is actually something they can get into without having to ask for somebody else's permission, be it maybe government or even corporations. So I pretty much agree with what everybody says. The big thing about DeFi right now is that it gives people who normally wouldn't have access to participate in financial kind of field, that kind of access.
Thank you so much. Nicholas, maybe also, I wanted to make up like a follow-up question. Being a technical guy, how does the DeFi technically work?
Okay, I mean, the thing is, usually the phrase used by most people is that you lock in your funds or your assets, it's collateral, as collateral, and then you can be able to give your collateral, you get access to give access to people in terms of they can borrow from the funds that you've locked in. In other words, you're part of the liquidity. You provide liquidity to whatever platform you're participating in. This happened, of course, the main one being Ethereum. Ethereum is the big one, but there are others coming up. And of course, there's a bit of coding and there's a bit of smart contracts, that sort of thing. But from what I've seen, it's not like it's not accessible to anybody who's willing to learn. And so the main thing here is that you lock up funds as collateral, which provides liquidity for people who want to borrow, or of course at an interest rate.
I'd like to clarify that is one form of the decentralized finance that exists, because there's a lot of different financial tools, instrument protocols that exist. But yes, locking collateral is locking up funds as collateral, then being able to create or mint a new coin or let people borrow what you've locked is one of the primary frameworks right now.
Okay. As you're looking, and as we was doing that little of reading on DeFi and all that, I come across a lot of terms: yield farming, liquidity mining, staking, etc., etc. My question, maybe to the followers right now, is it possible to make generational wealth digital assets?
Can you repeat that question?
Instead of, is it possible to make generational wealth with digital assets?
Yeah, can you repeat it?
It's possible.
Is it possible? Yeah.
Right. So
I
my
wanted
thought
to
on
discuss along those lines. Yeah.
All right.
Yeah.
So my thought on that is that it's possible to create generational wealth from these assets, yes. But I'd like to point out the fact that wealth is actually very holistic in the sense that we can't just look at one size fits all or one ticket to complete wealth. There are actually systems that have to be put in place because wealth follows a skill set and a culture that is that can actually be transferred, that can actually handle this wealth and direct it to different resources, give it a purpose. And it's actually not just about having the capital to do things, but the relationships, the structures, and the organizations or the products that we can export, services, and different kind of things that we can put out there as evidences of wealth. So there's financial capital, social capital, intellectual capital, all these other avenues of capital that we can look at and be able to quantify as value that we're being able to create and share out there. So with decentralized and digital tools, it's very possible, because whether you want to talk about people being able to trade, to leverage, and just be able to kind of speculate on digital assets, because whether you want to consider cryptocurrencies alone or various DeFi instruments, it's that people have made quite a lot of wealth in the last 10 years alone. And one of the things that actually surprises me is that people weren't genuinely ready for the cryptocurrency boom, because there are people to date who still just don't understand what these things are about. But it's a learning curve that I would say many people are really being able to benefit from, right? So the more we learn about it first, the more we understand the importance of these tools and these instruments, that's the first step. But in order to understand wealth and generational wealth especially, it's that we need to cross-share the knowledge that we are being able to gather for ourselves and in platforms like these, so that whatever we gain doesn't stand with us, doesn't just stay with us like in silos or pockets of knowledge that are just hidden there. Because one thing that definitely happens when you make your gains, you either want to spend, and that's just really natural habits. But when you're talking about generational wealth, it's that you're looking at something that can be transferred beyond your lifetime and beyond your your existence on earth as it would be. But the fact is that we need to be able to think holistically, in the sense that what am I creating? What am I being able to transfer beyond my comfort zone and beyond my existence, so that another person can be able to pick up and build upon it, do more, step up, level up, and even transfer that beyond themselves. So we need to think even about our communities, about our legacies and things like that. So that, for me, in a nutshell, are some of the thoughts that I do have around creating generational wealth.
And I would just say we've been kind of focusing on, during this panel, the upside and what we believe is, the potential. There's also that downside. And I think, Rosalind, as you were pointing out about the education and keeping it siloed, people really do need to understand the characteristics of these assets, because they aren't like traditional assets that most people are most familiar with. And that comes with a significant amount of risk. There's downside risk to that if you don't know what you're leveraging, if you don't know what you're transacting in. And so I think part of it is making sure that there is a strong educational system around these assets, and making sure that people really understand, when they're looking at potentially, putting capital on an exchange and purchasing, a plethora of different tokens. What are those tokens? What's the economics of those tokens? Who's backing those tokens? Are those tokens backed? If something goes awry, if their wallet is hacked or something like that, what recourse do they have? And I think that when you think about the traditional regulatory or the traditional financial services, it's highly regulated. And there's a reason why, because human nature does not change. And depending on your views of human nature, we all know that not everyone is a good actor. And so understanding that there is, the less you understand, the more your risk profile increases and you stand to lose. So I think that it's balancing that out with, understanding that it can also be a detriment if you don't understand it and have an appreciation.
Absolutely. And it's actually a very powerful detriment, because the truth is that people have also lost heavily in the DeFi space. Just by your PIN and your password, you lose everything. Why should that be a reality for so many people? I mean, you can tell people to keep their passwords, protect their PINs, but they will forget something that will cost them heavily. And that's the other aspect of education and even it extends even to regulators, in the sense that you're telling, or rather there's an expectation upon regulators to bring some sort of order to the DeFi space, but how can they regulate what they don't understand? It's already out there in use. So regulators, to an extent, are caught between people are using it and there are all these risks. How do you bring this together? How do you create a safe space? So we do have quite a long way to go, actually, but it's an amazing space in terms of opportunity, because the risks are the same things that will actually push innovators to provide the solutions that people need.
Yeah.
Right. And can I just add, sorry, Jamari, you were going to say something.
Yeah, well, but I'll actually let you go first.
Thanks. I was just going to add on to Valerie and Rosalie's points about education. But the other thing I wanted to mention was, oftentimes when we talk about digital assets, it's kind of like this big word a buzzword that can sometimes come off as very vague. It doesn't mean anything, right? We say it so much, it doesn't mean anything. But I think what we should think about in terms of generational wealth is that digital assets are tied to a physical asset, right? So in many instances. And so generational wealth doesn't necessarily have to always be about finance. You can attach digital assets to real estate. You can attach it to other tangible things. You can attach it to the revenues of a business, not just the thought of, funding or just this money, these millions and billions of dollars. It could be something that's attached to something maybe like a lifestyle business or something like that. I guess I'm just trying to find a way, I think in terms of education and general wealth, is trying to find a way to bring the conversation down to meet people where they are, instead of trying to make it sound like this big, grand, beautiful thing, and that has no downfalls. And thank you, Valerie, for pointing out that there are some disadvantages, right? And that, we can, if we're going to really think about educating our people, then we have to meet them where they are. And I think sometimes when we say all these buzzwords and stuff, we are speaking in silos because we're talking to people who already know. You know what I mean? So that's all I wanted to add.
Yeah.
Okay,
No.
Jamari and then Nicholas.
Yeah. Basically, I guess what I want to speak to is kind of covering some of the things that were being said. First of all, I know from being on like a few Facebook groups that a lot of times people in our community, when it comes to DeFi, they're just looking for that 10 times, that 1,000 time return without understanding the fundamentals of what they're getting into. So the education piece is important. For example, one of the biggest issues that I kind of see is people talk about, I just made a 10-time return on something, but the volume is extremely low. So it's like, even if you want to exit out of that investment that you made, you're not capable of doing that because the volume of people that's actually trading that asset is insufficient. And then we're not looking enough at, as Maureen was kind of bringing up, the more the other applications of DeFi. There's supply chain related decentralized finance applications that people are building out there, where you can take the inventory that you have and then be able to actually digitize your accounts payable or accounts receivable, and then leverage that for funding now, so you can actually continue with your business at the moment. She mentioned the real estate aspect for fractionalized ownership of homes, being able to be able to instead of doing a typical mortgage through through the existing financial system, you could collateralize the digital representation of your home, and then be able to sell off pieces of your home in that way, and then purchase them back as that time comes. And specifically, when we talk about kind of this liquidity part, and we talk about this generational wealth concept. For me, I think it's right now we're building new institutions, new financial system. And a lot of this stuff is being tested, is being verified, is finding out what works. So the risk is very high and the rewards can be high. So yes, we are going to have people establishing new centers and new protocols and new space where people have now new wealth, and they're going to be establishing and using that into the future. And for me, I want to make sure our community is informed enough to participate in this space, and also build out protocols and systems that match our interests, so that we're not the ones that's like that come in 3 years, 5 years later after the infrastructure has been built, and we have no say, we have no foot, no real contribution to establish what that next wave of finance looks like. Because I don't think we should be thinking generational wealth at the moment. We should be thinking, how do we establish systems that benefit us? And then those systems are what will benefit our generational wealth going into the future. Because there's things like the liquidity trading, for example, like that you can take massive losses in that because of the volatility of the assets, of digital assets that you're playing with. However, like even just trading between two stable coins, one being the USDT, which would be Tether, which is backed by who knows what fractional reserve of funds, and then maybe DAI, which is the algorithmic stable coin. You can maintain your value and then just be gaining money off of the trading in between those two at what is, I think it's 0.03 or 0.3% is the trading fee. You get a fractional percentage of that. That's a DeFi application that isn't as volatile, but you don't get the benefits of those rocket raises of Ethereum's value, or having sushi or whatever the new exotic NFT and liquidity products that's out there. But there are ways of diversifying your risk and being part of the establishment of that new generational institutions that we benefit from. That was long, sorry.
Nick, can you come on board? I'd love to hear your take on generational wealth. Nick? Are you there?
This shown is it's for 6 months now. Yeah. Since what? 2000 million. These are very early days. So there's going to be a lot of experimentation. It's going to be a lot of math. I mean, you've seen what the space has right now. A lot of oddly named coins and that sort of thing. So this is very, very early days. Sure, I mean, we've got what, a couple of billion locked up right now. The thing that maybe we should all realize is that the platform is completely raw. I mean, it's almost command line right now. We don't have tools which are accessible to the average person on the street. It's all, you've got to be tech savvy just to participate in there. Others, you're going to lose your shot. I mean, it's happened. I mean, like Rosalind mentioned. So these are early days for DeFi. The main thing is that people are building things, people are trying out new things, and it's open to anybody to participate in this. And this is the main thing, that you can get in and learn what is there and put in what you think your value to others. And it's not closed. I mean, the example is you can just walk into any bank and be part of that bank. In this case, literally, you walk into the platform and be part of the platform and participate in the platform and learn what people are doing, innovate in it, all that. So it's still very early days. I mean, I can point to all sorts of deficiencies, but for me, just the fact that it exists and that it's working, that some people are making money out of it, and it's working. So we know it works. So the the next step is, okay, so how do we scale this thing? How do we give people access? How do we make applications which are more user friendly, more customer facing sort of things, that sort of thing, that innovating, that is the next step right now. The thing about generational wealth is that's where it's going to come from. That's where the generational wealth is going to be produced from. Once people start using it and it's easier to use, it's accessible to a broad base. It of course improves liquidity. It makes it more broadly distributed, and so my feel on it right now is that we just keep rolling with it. It's there, it's accessible, and now all we need to do is learn. Education is a big thing, like we've all mentioned. Learn how to what it is, how to use it, and then innovate and keep growing with it. Right?
Thank you so much, Nicholas. Maybe to because of time, we're going to have like our last thoughts, our last topic. Is it possible to build wealth using digital assets? So I'd love to start off with Valerie. Your closing remark on the topic, and Valerie, Nicholas, Jumari, and Maureen, and I'll end with you, Rosalie. Yeah, start with Valerie. The last remark on the topic.
Okay, sorry, I had some static, so I didn't get the full question, but I'll defer to everyone else to get their opinion so I understand what it was. But my one parting thing today would be to dovetail off something that Maureen raised, and I don't think that it can be. I think it's extremely important that digital assets, it is a very broad term that is applied loosely. And a lot of these assets, the majority of them, they already fit within a very regulated structure here in the United States. And often they're either treated as commodities or securities. And we have very specific regulatory structures around the offering of securities, the trading of securities. And so I think it's really important to understand that while we use this very broad term digital asset, that you have to drill down a bit further because they do fit within specific asset categories already defined by law here in the US. So those are my parting words on the education piece.
Awesome, thanks, Mike. Wonderful. Yeah, Nicholas.
And again, my thoughts on this is like I was saying, is that it gives a lot of people who would normally have access to this type of thing. They have access. For me, that is a really big thing. Of course, there's a lot of things that need to happen here. There's a lot of growth. There's a lot of innovating that needs to happen. And also, like everybody knows, this is an asset, a digital asset. And in Africa, well, this is not, I would say, developed. But what it has done is that a lot of young people, of course, are aware of the crypto space. A lot of them, young people, in our population demographics is all young people. So, and they are aware of it. And it gives them a platform to get in, to participate in this field. And this doesn't require permission either from the government or from corporations or from practically anybody. It doesn't need permission. So, that empowers them. That gives them, they say, okay, I can be part of this. So what do I do? I mean, what do I need to know? Or what do I need, like our company? That's what we do. We train people, they come, we tell them, we help them in any way we can. So for me, it's the big thing here is that it's a platform which gives a lot of young people access to something which they would never have any access to in this space. Thank you.
Awesome. Jamari, and then Maureen, and last.
Oh, Jamari. Okay, got you. Yes. So I'm going to give some of my current things I've been thinking about that I feel are important, that I hear a lot about. One, pay your taxes, just because it's inside cryptocurrency space. It means that the IRS can't track those ledger transactions. Even mixers aren't necessarily assured. So best if you're trying to do that, you might have zero cash and maybe Monero, but still I would advise you to pay your taxes, because whenever you want to off ramp back into fiat currency, or whatever the dollars are, that becomes trackable at that point. So you might need, if you need a good accountant, you can get one. Also be aware of the fact that when you're participating in these spaces, that one of the major friction points right now is gas costs. And that's the cost of actually executing a transaction. So if you're trying to dip your toe in the space and you're trading like $2 and $3 here, currently the gas prices is about $15, $10 for transactions. So you'll be taking a loss on every single trade if you're playing at this moment. And that speaks to the fact that this space still has to grow, that there's still room for scaling up. So you have to look forward to those things. Participate at the infrastructure level of things. Don't just try to go for the fancy exotic new coins. Look for people that do your research, find things that have solid fundamentals that align with your values. Maybe have people that look like you on the team, and participate in those projects, and that'll help those projects become more sustainable and grow and provide a better space for everyone. I'll go with that.
Thank you, Jamari. You said some of the things I was going to say, so I'll say one of those things again, because I think repetition is great. Pay your taxes. The IRS is paying attention. In the new 2020 tax form, they ask you about cryptocurrencies specifically, so you want to be mindful of that. But one thing that I'll say, I guess that's my closing words, is that at the end of the day, even though we're talking about creating generational wealth and finding ways to diversify our portfolios and our funds, we also have to be mindful that all these companies that we're investing in or that we are buying their coins and all, they are businesses. They want to make money too. And so we can't just only think about it from a community perspective without thinking about the business side of this, right? And to Jamari's point with the gas, these are all business decisions. Ethereum has been charging gas and they're not going to stop probably, right? So you need to be mindful of not only the educational aspect of it, but the expenses and the business side of how this all works. And one thing I'll also mention lastly is for people to do research on stable coins, because we also have to think about, a lot of these DeFi projects are what they're actually issuing or what they're calling what they're issuing are stable coins, right? And that doesn't necessarily mean that they aren't securities, as Valerie pointed out, but we have to keep in mind of, what laws apply that are in effect now that apply to what we're doing, even though there's not a specific, cryptocurrency related, law, or it doesn't specifically say virtual currency, et cetera. We have to be mindful of the laws that already exist that do govern a lot of what we do. I mean, so I know a lot of the technology is also innovative, but a lot of it is kind of the same, finance, how the finance world works and how we want it to work for us, even with these different innovative technologies, is very similar to the system. Now we're just trying to find a way to make it more, equitable, accessible, etc. So I encourage you, I think Jamari said that already, encourage you to do your research. That's all.
Thank you so much. Roslyn, is that there?
Yes, thank you so much. My word to all, first of all, is an encouragement that this decentralized finance, DeFi, all these techie terms, let them not intimidate you. Please do not feel scared and feel like it's too much of a mental burden to think about. They're really tools for us. That's the thing. And one of the things that we can best do for ourselves, whether as an innovator or as a common person out there wondering what's all this stuff about tech and too many fancy words, just be mindful that things are changing, not just financially, but on so many levels that we just need to be conscious of where, there's a movement, first of all, fourth industrial revolution. There's a whole other conversation around that. Building wealth generation, people making all these gains. Don't be distracted. Find what is meaningful to you. Use DeFi as a tool, but before you use DeFi as a tool, acquire the right skill set and develop the right mindset for you to have a healthy financial life, because that's literally the beginning of you being able to grow in different financial aspects, whether you want to think about it as an entrepreneur, or as a business owner, or just as an employee, or just someone who just wants to make an extra income, right? But be able to diversify your your extra streams of income, so that you're not just relying on one thing that will keep you going. Because just as each of the panelists has been able to point out, it's that building generational wealth isn't just one size fits all or a magic one that you're gonna wave and wake up rich. No, you need to be able to apply the diligence and the right mindset so that you can grow into it, and it doesn't crash you as a person, doesn't crash your community, doesn't crash your business, and you'll be able to benefit and look back from that and be happy with the decisions that you made. So grow emotionally, grow socially, grow professionally, then grow financially. You'll be able to appreciate wealth on a more holistic level. So use DeFi as a tool, grow holistically. Thank you so much.